Hello, traders, and welcome to this week's market
Content
outlook
manager
from
at
Exness.
And in this video,
for
I'm
a
going to
trade
provide
over the
Michael
next few
Stark's
days,
actual
finance
idea
some of the primary narratives that are
possible
driving
movement
and what traders who were to take the position
be aware of.
would need. But first, let's look back at the performance of last week. The idea was a potential buy for the NASDAQ 100 in the USA. One of the main indices. That idea was partially accurate. If we look at the chart,
did reach the
we can
target that
see
was
suggested in the idea and exceeded it slightly to reach 15,500. However, the idea for this week is a potential buy for gold. The price of gold recently performed as somewhat better, having recovered from the low. It could continue to move up and possibly to test the area around 1970 to 1975, which is the area of the 20-day moving average. The slow stochastic is no longer in the oversold zone, and overall there is a larger context of an uptrend. Possibly in the longer term, the continue to extend further up. One of the primary narratives that's possible movement up by gold is continuing expectations that monetary policy is going to remain at least not very quarkish. It seems likely that the Fed is going to call for another hold in the base rate in the USA on the 13th of December, and it's also important to note, according to the commitment of traders, demand for gold among large speculators remained relatively high recently, which has supported the upward move by gold. Now, for traders who were to take the position this week, the most critical factor is the reaction by markets to American inflation, which is due out shortly after the time we've recorded. If inflation remains broadly as stable, seems to be possibly expected, then it's unlikely that gold is going significantly downward. However, if there's a big inflation ticks up, then it might be possible that the idea This is also important later in the week to be looking at American retail sales and industrial data from China, among others. So in summary, the potential gold with a possible target around 1970 is the primary narrative driving that movement are expectations that rates will stay and possibly start coming down next year, and the greater demand among large speculators, according to the COT, for buying gold. Critical release to be monitored by traders this week inflation, but also retail sales from the USA and Chinese could be important. Remember that this is just it's not a signal, and it's not a guarantee. Always do your own research and manage risk.